What up, y'all? Yo, thank y'all for tapping in, tuning in. We about to talk. Who deserves the Medal of Freedom is my accountant. I got my guy Mitch in the building. We gonna talk about Joe Biden tax plan because I want to talk about these implications. What up? What up? Where is Mr. Manhattan? What up? What's good? Chosen Diamond. What up? Thank you. Spoiled Brat. Salute. Spoiled Brat in the building. Simply T in the building. You know, I got my guy Money Making Mitch Stevenson. What up? I got my guy Money Making Mitch. We about to tap in. MJ the Soul. What up? Yeah, back like I never left. You know what I'm saying? We back for one more. Don Ed. What up, Don Ed? Salute. All right, so I'm just waiting for my guy Mitch to come in the building. Tax Tuesdays. That's what we calling this. We calling this Tax Tuesday. Fem Creator, Wagwan Fem Creator in the building. Blazing Eurasian. What up, Raven? It was good. Goddess Amal, what up? We in the building. Yeah, I'm just waiting for my guy Money Making Mitch. There we go, Mitch right there. We gonna tap in. Mitch to tap in. We want to talk. We want to talk. We want to talk about this Joe Biden tax plan. Yo, wait, I had your theme music. Hold on, let me play it real quick. Look. Google's your friend, bruh. And still counting. Who deserves the Medal of Freedom is my accountant.
Working round shit.
You know what I'm saying? Yo, who deserves the Medal of Freedom is my accountant. You know what I mean?
Big fact.
Yeah, salute to you, King. I appreciate you, man, because I definitely wanted to do this because once the media announced President-elect Joe Biden, we know that he has he got a tax plan that some people not happy about. I'll be honest. Personally, I'm not happy about it. You know what I'm saying? I kind of think that when you look at the the Senate, the House, like it may not even pass, but we'll see. Let's talk, bro. Let's talk. Like, I first of all, I just want to talk about the implications. What does that mean to everyday people? What does it mean for people who have businesses? What does it mean for the Henrys, the high earners, not yet rich? What happens to the people who make 400 bands? You know what I'm saying? Like, what's happening, man? So, talk to us, Mitch. Talk to us. I mean, first, they should know you by now, but please, who is Money Making Mitch? Talk to us.
Yeah, real quick, man. I appreciate you, King, for having me on as usual, man. As Ash Cash introduced, my name is Michel Valbrun, aka Money Making Mitch. If you don't know, now you know I go by Money Making Mitch. And really, I'm a tax strategist, certified public accountant, award-winning author, writer, contributor for Entrepreneur Magazine. And really, what I focus on is helping people save $10,000 to $100,000 in taxes legally and ethically. Like Ash Cash alluded to in that intro, moving through hula hoops and loopholes.
That's it.
Working around to, really just legally and ethically make sure that people are able to navigate the tax code, understand the tax code, and be able to take advantage of, the tax laws out there, especially when you got this big sweeping change that could potentially be in place with President-elect Joe Biden, what he's looking to do with the tax law. But I did want to just kick it off and say, first and foremost, don't panic, don't run, don't freak out about it.
I was about to go to Canada. I was gonna go to Canada with you know what I'm saying? I was gonna go to the other side, man. I was like, yo, it's time to go to Canada, man. You know what I'm saying? Like I've been on the grind. I've been on the grind for 9-10 years. I'm just starting to see the fruits of my labor. So don't tax me now, Joe Biden. Like, come on, let me enjoy. You know what I'm saying? Like, let me enjoy this. Like, come on, chill out, Joe Biden. I'm about to go to Canada. I'm panicking. Talk to me, man. Yeah.
I know, and people are saying that, and that that could be a potential option. To me, just generally speaking, you know, if just generally speaking, the 400,000 people, those making over 400,000 or more, yes, he's looking to tax and try to really just close down and tighten up some of those loopholes and things that Trump put in place in order to help people, business owners, and those making $400,000 or more in taxes save some money. But no, you don't have to run and panic to Canada. Generally speaking, as long as you're proactive, as long as you're on top of what's going on, the rules, the laws, the regulations, there's ways to maneuver. You know what I mean? We just got to move differently. It's going to be more difficult to try to navigate what he's doing because he's shutting down a lot of things in order to make sure that.
Hey, Dr. Kenyon, it's like, stop trolling us. I know health is wealth, but if you healthy and broke, that don't help you either. I'm a force. Nah, because like Dr. Kenyon, fact out to Dr. Kenyon, talk about that's so sad you guys focus on money and not your health. Health is wealth. We focus on both abundance mindset only. But you can't, like, I know a lot of healthy people who broke and they ain't happy. So let me get that straight. My fault. Go ahead. I just wanted to say that.
No, you're good.
Yeah.
No, I appreciate you saying that too. And yeah, just put out there. Yeah, absolutely. Listen, there's way bigger issues that are on the table than this tax thing. Obviously, you know, there's a lot of social things going on politically.
Yep.
So a lot of things that we needed to really tap in and be focused on. My expertise, my knowledge base, my wheelhouse is taxes. So I'm gonna talk taxes.
Yep.
I'm gonna talk money. Not to say I don't care about that. You know, and it is what it is. But yeah, if you're looking for that health as well stuff,
this ain't it. No, this ain't it.
This ain't the line. At least not this time. You know what I mean? But right now, I just want people who are interested in understanding what these new rules and regulations mean. Then that's what we're going to talk about tonight. So yeah, you know, so with the current President Trump, there was a big news that came out that he only paid $750 in taxes. We know he's with his businesses, he's been making millions, billions, has all this real estate and only paid $750 in taxes. You got President-elect during that same time period who paid close to like $300,000 in taxes, right? Mm-hmm. And probably makes significantly less than him. But that kind of just shows you their mindset about what they mean and means to pay taxes. Obviously, with Trump, you know, if he can find a loophole, if he can find some way to navigate and push and kind of be more aggressive on it, that's what he's going to do. Like if just the way he's kind of pushing and holding off on this election process, that's kind of his move. So that shows you his mindset. Joe Biden's of the mindset of if you make over 400,000 or more, you have enough money to be able to give to the government so they can increase revenues and they can use that for however they see fit. Yeah. So really his plan overall is to increase and raise the tax revenue by 2.4 to 4 trillion over the next 10 years. Mm-hmm. And the way that he's looking to do that are a couple of changes that he's putting in place in order to get some more of that tax revenue. So really, even taking a step back historically, so when Trump got into office, one of the big things, the changes that he made was he implemented the Tax Cuts and Jobs Act. Yep. With the Tax Cuts and Jobs Act, he created one of the biggest tax reforms in literally the past 30 years. Mm-hmm. Like it was bigger. We haven't seen anything that big and significant since 1986. Wow. So he came in and he really lowered the tax rates and the tax brackets specifically for business owners, even on the individual basis rate as well. So he decreased it on those. He decreased corporate tax rates. He created a whole bunch of incentives and benefits for business owners, including the qualified business income deduction, 1031 exchange, all those kind of things. So just a whole bunch of things.
And what's the 1031 exchange? Because that's important. That's really important. Yeah. And from when and correct me if I'm wrong, from what I understand, the Joe Biden tax laws is going to get rid of the 1031 exchange. So what is that? Talk to me.
Yeah, so the 1031 exchange it's a tax code. It's a section of the tax code. And what it allows you to do is you have what are called capital gains, right? So with the capital gains, it's a favorable tax treatment. So that's usually for an asset. If you buy an asset, which is like a stock, a property, what have you, you purchase that asset, and if you hold on to it for more than a year, that's considered a long-term capital gain. And then because you hold on to it for more than a year, you pay either 15% or 20% on your tax rate. So it's a favorable tax treatment. With the 1031 exchange, what it allows you to do is it allows you to defer your taxes. So typically speaking, if you were to buy a property, you sell it for $100,000, you hold it for more than a year, you would have to pay that capital gains tax pretty much within that year. Mm-hmm. What the 1031 exchange allows you to do is it allows you to take that gain, reinvest it into another similar kind of property, and continue to reinvest it to continue to defer the taxes on that. Mm-hmm. So that's generally speaking just high level. There's a lot of details that go into it. You need an intermediary. You have to identify the property within 45 days. You have to execute on the deal within 180 days. A lot of other details, but that just generally speaking, that's the way it works. And one of the things that Trump was looking to do was he was obviously, you can imagine that if you're someone who's a real estate investor, especially you're doing like multi-unit properties, you're doing like a home, you're doing like these crazy big transactions, then that's huge. Right. That's huge for you. So that's probably, I hate to say, unfortunately, I think that may kind of slow some people up on how they move when it comes to investing or whatever the case is, but we'll see. But he's looking to kind of get rid of that as part of this tax cuts, as part of his new tax plan, because typically speaking, people who, what you call middle class America, people who are making like $50,000 a year, they're not really doing those kind of transactions. So he's trying to say like, look, y'all over there on the rich side, y'all who making 400,000, whatever, you guys are doing a lot of things that, you know, you guys will continue to build up your wealth, and it's creating like this wealth gap. And he's looking to, like I said, to get some of that money to be able to do whatever he plans on with that tax revenue.
Yep.
So I understand that he is looking to do.
But let me ask you something, and this is just for my knowledge, because I also know that yes, I agree, or not even agree or disagree, but I know that yes, there are a small percentage of Americans that are being affected, which is I think 1.9%, right, are being affected. But those 1.9% also though fund the majority of the jobs and the and stimulate the economy. So I'll give you a prime example. Mayor de Blasio tried to do the same thing in Manhattan, right? So in New York, Mayor de Blasio started to impose some of these taxes on wealthy people. And what did the wealthy people do? They left New York and they went to Connecticut or Greenwich, and then now stores are boarded up, and now the middle class people who are relying on these jobs don't have these jobs. And so is that a possible effect of that? Like, you know what I'm saying? Like of sort of like taxing the rich in that way, you know?
Yeah, I mean, that's and that's kind of getting political, right? Because it just kind of depends on what your values, your views on that is. That's kind of the spillover impact of that, right? So you if let's say a president comes in and they start imposing these taxes on the quote unquote wealthy business owners, etc., because they feel like they have the wealth and the money to do so, then it's going to impact in that way. And that's one of the reasons why even when Biden gets in office, there's still going to be deductions and benefits of being a business owner and investor.
Okay,
so
please,
those things are not going.
That's what I want to hear about. Talk to me about those things.
Yeah, exactly. Yeah, because at the end of the day, he's not going to get rid of that. All he's doing is tightening up on different things that he feels like, okay, y'all are doing too much. Like you gotta start paying some more money on tax. That's how he feels about it. You know what I mean? So that's his approach. That's his perspective. The idea is anyone who's making less than 400,000, they may see at the most, according to taxfoundation.com, maybe a 1% increase. Okay. Those who are making more than that, they're estimating about 17.7% of an increase. And just to give you guys some perspective too, I know like there was a lot of memes and screenshots of showing New York and California at like a 62% tax rate or whatever. So that's it's not going to go down exactly like that.
Okay.
When you really look at it, it's more, they're just showing the combined federal rate and the tax rate and what that looks like. When it comes to our tax code, it's progressive. So, you know, each piece of income that you make, you get taxed at a certain amount. So you have the 10%, 12%, 24%, I believe 32. So you have different tax brackets, and it's not based on that one percentage. So then when you look at what's called the effective tax rate, which is how much money you actually paid in taxes divided by your taxable income, it ends up being a lot lower than that. So don't freak out about that, especially if you're in California, New York.
Okay.
So just a heads up on that.
Yeah.
But yeah, that's one of the things that he's looking to do. Corporations, he's looking to increase what Trump put into place with the Tax Cuts and Jobs Act is he put a flat 21% on corporate taxes. That's going back up to 28%. They're also cutting back on another tax strategy is to have operations overseas. You know, Puerto Rico's a popular one, the Virgin Islands, etc. So sometimes, you know, people use that as a way to save money on taxes. They're looking to increase the taxes on those profits from international business. So that's kind of on the, and then they're also looking to increase those individual tax rates as well. So you remember when I was going over the 10, 12, 24, 32, et cetera. So they're looking to increase those federal tax rates. So which is currently the highest one, I think is 37%. They're looking to increase that back to 39.6%. So that's kind of on the negative side, right? But
because I was going to say, because I know that child tax, earned income credit, refundable retirement credit, I know those are some things that are like on the bright side, right? So you talk to us a little bit about some of the bright side of the Joe Biden tax plan.
Yeah, so he's looking to increase the maximum child tax credit. Basically, if you have dependents, children, you're able to get a tax credit for that if your income is under a certain amount. He's looking to expand that. I believe it was currently $3,000 you can get per child. He's looking at, increase that to about $8,000 per child. So that's going to help expand it. He's also looking to increase that benefit to people who are over 65 and older who don't have children. He's looking to extend that opportunity and that benefit to them so they get to benefit from having that child tax credit. They're also looking to expand the earned income credit as well. So the earned income credit is a credit that's given usually to lower income individuals and looking to give them some more money in that way. So, you know, obviously, you know, we talked a little about how the impact would be for business owners about, you know, how that's going to impact people financially. But, you know, these are kind of ways that he's looking to kind of help and supplement that. He's also looking to reinstate the first-time homeowners credit. So if you're a first-time home buyer, he's looking to help you out and get you a credit with that as well. So yeah, there are some bright sides. Overall, I think his mentality, his philosophy is like, you know, we're all kind of in this together. Let's all, you know, just try to take this money and use it to, you know, however he seems to be, you know, whatever he thinks is the right way to use that money.
For sure.
You know?
For sure.
And he's also another thing too. So one kind of big tax benefit is contributing to a 401k. So if you know, with the 401k, it's a retirement account. You can use that as a W-2 worker. You can create like a solo 401k if you're a self-employed individual, just a one-person show. That's pre-tax dollars that you could put into a retirement account. You put that into the retirement account up to $19,500. I believe if you're under 50, and that's kind of that reduces your taxable income. So that helps you save some money on taxes. This kind of gets complicated when you think about it. Basically, what he's looking to do is he's trying to even the playing field on that, and basically get it to where, let's say you're at the highest tax bracket, right? So the highest tax bracket right now is currently 37%. The way tax savings works is the higher your tax bracket or your tax rate is, the bigger the savings is for you. So if you're at a higher tax bracket, let's say you can contribute at $9,500, 37% of that just generally speaking, just kind of like just quick math, quick dirty math, you're able to save 37% of whatever that 19,500 is, right?
Mm-hmm.
If you're on the lower end of it, let's say you're like at the 12%, 10% or whatever, you only get the benefit of having that 19,500. Let's call it 10%. The benefit of having that 19,500 is only $1,950 in tax savings for you.
Mm-hmm.
So just by being in a higher tax bracket, it's more beneficial for you from a dollar perspective.
Mm-hmm.
So what he's looking to do is now incorporate just like a flat, I believe it's 20% on whatever the contribution is. So it's not going to be based on the tax bracket. It's not going to be necessarily a deduction. It's going to be more of a credit that you get. So it's 20% everyone across. So if you're in a higher bracket than 20%, right? If you're in the 22, 24 and higher, it's not going to be as beneficial for you. So one of the things that you could do is maybe look at another. It's not going to be as beneficial for you to contribute into that 401k. So it's probably better for you to maybe look at some other retirement options. A lot of people in the higher tax bracket are looking and considering investing into like a Roth 401k, which is after tax. So you already pay taxes on it. You put that in there. It grows tax free.
Cash value life insurance as well.
Yeah,
might be another strategy. The Master Playbook. What's up? So now the challenge is teaching our community what to do with these tax credits once their basic needs are met. So talk to us a little bit about. So give us some wealth secrets, right? Both for individuals who may not fall in that $400,000 category, because you've been known to really help people save $10,000 to $100,000 legally and ethically on their taxes. So give us some secrets, then we'll open it up for any questions, because I know people may have some questions, but give us some tax wealth secrets on how, no matter whether no matter what happens with these with these tax laws, how we could really like maximize our taxes.
Yeah, 100%. So you got a couple things that you can do. So number one, just understanding the tax code and understanding that it's beneficial to be a business owner and an investor. Again, as Ash Cash alluded to earlier when we were talking, is that the government sees that, and this is on both sides. They both see that as it's beneficial to the economy. Mm-hmm. So if you invest in a business, you have employees, you're hiring people, you're spreading money around. So that's a good thing. So investments, if you invest into real estate, the stock market, etc., that's beneficial because you're putting money into the economy, you're building businesses. So they love that. Mm-hmm. So if you are a W-2 worker with no business, mm-hmm. nothing, really you're kind of limited on what you could do. I mentioned the 401k is something that you can do, right? So you can contribute, max that out as much as you can. That's going to help you save some money. If you have children, that can help you save some money as well, or you get some kind of tax credits for those or dependents. That helps you save some money. You have the itemized deductions, which they increased. Trump increased to $12,400, I believe, for individual filers, $24,800 for married filing jointly. That's a little bit of a higher threshold to meet on the itemized deduction side, but you might have some itemized deductions that you can take. But if that's all, if you're just want to stick with that 9-to-5 W-2, then you're pretty much, that's kind of all you got. Mm-hmm. So really what I recommend for everyone to do is to get a business, not only for the tax benefits, but for the generational wealth that you're about to create, right? Mm-hmm. We know that entrepreneurship is, there's no ceilings to how much you can make with entrepreneurship. Yep. And once you have a side business, and again, doesn't need to replace your income. It doesn't need to be that serious. As long as you are doing activities that are
in pursuit of profit,
yeah. Then you can go ahead and call yourself a business owner, right? Mm-hmm. So one of the benefits with the business, a lot of people starting off, this is not something I'm telling you to do intentionally, but with your first year of business, a lot of people have losses with their business. Mm-hmm. it's just normal, right? You're investing in your business. You're buying laptops. You're buying a computer. You're advertising. You're putting yourself out there. You're figuring things out. You're failing. You're succeeding. You're getting wins, losses. You're going through that whole process of the first year. So what a benefit of doing that is, yeah, it may show as a loss, but that loss can be applied to that W-2 income that you're paying. So whatever, let's say you, with your W-2 income, you know that they're taking out taxes, you're paying into the tax system. Well, at the end of the year, when you go ahead and do your taxes, they're going to figure out, okay, did you pay too much? Did you pay too little? Where are you at? If you have that loss on the business side, that can be applied against that and give you some money back. So that helps you. So being a business owner helps you out. There's a lot of things that you can deduct for business. Really, there's 4 requirements as it relates to business. And that's going to be, it needs to be, I call it tax-free. So in order to try to have a tax-free year, there's 4 requirements really. The first one is it needs to be for business. So the expenses need to be for business. It needs to be considered regular for the business. So it needs to make sense with the kind of business that you're in. The next part of that is it needs to be considered essential for the business. And the fourth part of that is it needs to be extravagant less. So it can't be extravagant. You can't spend crazy amounts. That's going to be based on how much money you're making in the business. So let's say you have a business, you're only making $5,000, trying to spend $10,000 on something. The IRS is going to say, okay, you're doing too much. So that's extravagant. So on the business side, yeah, you could save some money there. Really, a tax wealth secret. And we talk a lot about this in the tax wealth secrets course that Ash pinned down there. And you guys also make sure you put in there, they get the 50% off on that tax wealth secrets. If you put Mind Right 20, you get that 50% off on it. And that also includes a 1 hour consultation too. So if you go ahead, if you're watching this live, you get a 1 hour consult with me. You could do it within the next 12 months. And we can jump on a call and I'll answer all your questions. You're especially going to want that call, once this thing is finally put in place. Obviously, Senate has to pass it. We have some runoffs in Georgia. We got two seats on the Democratic side in Georgia that, could potentially go ahead and be put in. And then, that might help to get this thing passed. So if this thing passes, you want to be prepared. If it doesn't pass, you still want to be prepared because there's a lot of things that Trump put in place that's going to impact you. So go ahead and make sure you pick that up. But yeah, on the business side, one of the tax wealth secrets is that you can hire your children through the business. So if you have children, one of the tricks that the wealthy do is they pay their children through the business up to pretty much a standard deduction amount. And that could be not only a deduction for your business, but now it's a way for you to pay your children. So a lot of people are already paying their kids, even giving them, paying them for chores. Maybe paying your child. Maybe you might want to buy your child a car. That's actually a way to do it because you're paying them through the business. They use that money. It's their money because they're supposed to have a separate account for their money. So it's not like you just, cash them out. It needs to go into their account. And then they can use that money for how they want to. As a parent, you're supposed to have that conversation, communication, be like, yo, I want you to use this money for school, for the car, whatever the case is, groceries, however you want to use it. So that's a way that you can do it. You kind of talked a little bit about this too with the insurance. There's a lot of insurance policies out there that give you some tax benefits. I mean, a lot of people, you can use it as an investment vehicle, and a lot of the wealthy and the rich, they use insurance not only to protect their lives, but also to protect their family and really create wealth and build wealth within themselves, within their household. You got trust, man. It goes deep. It goes deep, bro.
For sure. So make sure y'all take advantage of that, taxwealthsecrets.com. Use the code MindRight20, get 50% off. You also get access to Talk to Mitch. Let's take some questions real quick. So if you guys have any questions, please put the questions in the question box. Let's see. Let me see if this is all right. Would increasing sales tax and lowering state Fed tax solve anything? Wealthy inevitably pay more taxes. So it's saying, would increasing sales tax and lowering state/federal taxes solve anything? Wealthy people buy more stuff that would inevitably, I don't know what else to say, but what's your thoughts on that, Mitch?
Yeah, I mean, you don't want that. I mean, sales tax. So really, and I forgot to mention this too. So when it comes to expenses in your life, taxes are your single largest expense. So
Yep.
when you make money, you pay income tax. When you pay for something, you pay sales tax. When you purchase something and sell it for more than what you paid for, you pay capital gains tax. When you buy a property, you pay property tax.
Yep.
When you die, someone pays estate tax.
Right.
So that's sales tax. I mean, I don't want that.
Right.
I don't want
Right.
it
Right.
because we're always paying sales tax, lowering the federal and state rates. And I mean, I think it's probably because the federal rates is national, so it's kind of like one big sweep of just collecting money.
Mm-hmm.
So but I haven't done the math. Maybe it might work. I don't know.
Yeah. All right. Let's see. And so, what do you suggest to get your child a debit card to teach them how to spend with it and how to use it? So, what do you suggest to get your child a debit card? Yo, I actually have a solution, so I'm gonna save that. I'm gonna save that question because fat shout out to my own girl Tanya. She actually has the first black owned child debit card that really gives financial education. So we'll be doing something soon. So we'll wait for that. Let's see what else. So Virtuous Beauty, what's up? Queen K in the building. Would you assume that I'm potentially leaving money? Would you assume that I'm potentially leaving money on the table if I'm working as an independent contractor? I don't see the rest of that question though, so I don't know.
Yeah,
Queen K, ask it in the comments maybe because I can't see the rest of that.
That's yeah. There's a lot of details in there, but I would say I do see two tax concepts I want to address real quick. So you got the concept of independent worker and a W-2 worker. So if you're an independent contractor, you are automatically by default considered a business owner. Self-employed, you do have to pay self-employment tax. So as a W-2 worker, you pay 7.65 on payroll taxes. Your employer pays the other half of that, which is 7.65. So in total, that comes out to about 6.3% as a self-employed individual, independent contractor. As the Queen mentioned, she is considered a business owner, but that's actually a good thing for you because now you're considered a business owner. So it opens up the tax law for you to be able to take a whole bunch of deductions and maneuver and move your money around to help you save money on taxes. Mm-hmm. So, but you're leaving money on the table if you're not working with a CPA or someone that can walk you through how to do that. So that's what I find too, day in and day out. I talk to entrepreneurs, multiple entrepreneurs every day, and they're leaving a lot of money there. Most people, I would say actually, there's a Forbes article that came out that said over 90% of people are overpaying in taxes.
Wow.
Just because they don't know what's out there for them. So
90%.
Yeah, 90%, bro.
Wow.
Yeah, I'm telling you, and it's crazy,
man. We got another question. Too Smooth Ty says, how many years can an entrepreneur report a loss before being flagged?
Too Smooth. That's the homie Tyrone. Yeah. Good question, bro. Yeah. So generally speaking, so what the IRS looks at, what they kind of what becomes a red flag is 3 out of 5 years. So if you have losses for more than 3 out of 5 years, that begins to kind of look suspicious to the IRS. They kind of start looking at it as a hobby, because the expectation is within 3 years you're supposed to start generating a profit. Now there's court cases out there there's actually a guy who I think he was taking losses for 20 years straight, and they took him to court on it, challenged him, and he was able to actually get out of that because he had like a business plan. He's like, look, I legitimately was trying to make money. This is the plan, this is the number, but XYZ, he was able to explain it away, but that's risky. So yeah, that's the answer on that.
All right. So Queen K says, would you assume that I'm leaving money on the table as an independent contractor? I stepped away from my corporate job to build my business, but it put me in a hole as it relates to taxes.
Yeah, so you're leaving money on the table only because you just, I mean, you're not, I don't know if you're working with someone on taxes, but no, it's beneficial for you to have a business because, like I
Right.
said, there's ways that you can reduce how much you owe in taxes. The challenging thing that I find with a lot of entrepreneurs is that they don't set money aside for
Right.
taxes. So
Right.
I would recommend just good practice if you can. Queen, as you're bringing in money, you want to put away 30%
Yeah.
for taxes just to be safe. So just or pay it out during the year.
Yeah.
Depending, I'm not sure how much you're making, but another good practice, you need to be paying it out during the year, kind of like as a W-2. Maybe once a quarter, you go ahead and send that off.
Yeah, so she says, when I filed my taxes last year, nothing I did was able to be written off, even with my child as dependents. Yeah, you got
No,
to get the right people on your team, because like,
that is
yeah, because look, fast out to Trandle Realtor for life. She said she just wrote off her Louis Vuitton bag. You know what I'm saying? So. You know, she said she keep her business files in it. You know what I'm saying? So, fast out
hey.
there. You know what I mean? All right, hold on. Let's see. We got some more questions. Any changes in the short-term capital gains tax?
Yeah. Well, short-term capital gains tax, that's really the ordinary income. That's what it gets taxed at. So, not that I could see, really it's going to be that long-term income. I'm sorry, long-term gains. They're actually going to change that to, they're going to get rid of the favorable 15 or 20%, change that to ordinary income, I believe, on income over $1 million. So I don't think I saw anything on the short-term capital gains because that's just tax that ordinary income.
All right, dope. What else we got? Any insight on filing out 1099 OID tax form?
1099 OID tax form. I couldn't tell you much about that right now. 1099 OID tax form. You might have to spell that out for me.
All right, let's go to the next question.
Just make sure I understand it.
Rewrite that. Is some of the money you pay your child tax free up?
Yeah, it's up to a certain amount. So it's up to the standard deduction amount. So basically up to 12,400 is what you could do. But it depends on a lot of factors. So you want to make sure that you write the you figure out what the job is. It needs to the hourly rate needs to make sense with the job. You want to document how many hours they do. You need to put them on payroll. There's a whole process that you got to go through. So yeah, if you have questions on that, I talk all about that in the course, taxwealthsecrets.com. Mine writes 20 for 50% off.
Dope. The master playbook says stay hydrated. I got you. I'm on day 37. Day 36. I did a 40-day fast. So I'm almost at the finish line. I got 3 more days left. Word. Yeah, I'm about to turn 40. So it was like, I did a 40-day fast to going into my 40s. So my birthday's on Friday. You know what I'm saying? The legend day.
Oh, no.
The day of the legend.
That's
you know what I mean? Friday the 13th. Friday the 13th, I'm going to play Jason. You know what I'm saying? Cleveland says, how old can we get an EIC for our children?
You said the EIC, the earned income credit.
Yeah.
How old can get EIC for our children? It's 18 and younger, if I'm understanding your question correctly.
All right, dope.
Yep.
I think let's see.
Or 18 or under, my bad. Did I say over? Under.
And then last one, what about short-term capital gains from trading stocks?
Yeah, same. It's it's taxed as ordinary income. One thing with stocks, is you have 2 different things going on with stocks. So you could be when it comes to stocks, you could be a trader or you could be considered an investor. Those have different tax consequences and implications. As a trader, you can qualify as a trader if it is pretty much your main source of income. So if you're pretty much like a day trader, you're doing it day in, day out. You get tax treatments. You get a certain tax treatment on that. Typically, that's ordinary income, which is that short-term capital gains. As an investor, if you hold it for more than 1 year, you're it's more passive. Then you get some more favorable tax treatments on that. But yeah, I talk about that in the program too. Yep.
All right, dope. All right, cool. Our Flabulous Life. Happy early birthday, Ash minus Saturday. Salute, legend. Legends are made in November. You know what I mean? Respectfully.
Yes, sir.
Have they figured out how to tax? Oh, yeah. That Bitcoin is different, right? So the master playbook says, have they figured out how to tax Bitcoin investment gains yet? Because I know regardless if you take you can't carry over any losses. You have to report that the same year if I'm not correct, if I'm not mistaken, right?
Yeah. So the Bitcoin stuff. Yeah, they're still trying to tighten up on how that's being regulated and taxed. But yeah, generally speaking, it kind of works. It kind of works similar to just ordinary stocks. But yeah, Bitcoin is that's a whole nother beast.
Yeah.
I don't get too deep in Bitcoin, honestly.
Yeah.
From a tax perspective.
What up, Chris? My guy Chris says, first year filing as a sole proprietorship. What happens when your business is filed as at a loss in the first year?
That's a win. That's a W.
Right.
Take the W. Take the W. Don't look at it as a loss. It's actually beneficial for you, especially if you have other income outside of your business to be able to write that off on.
If my business contributes towards my child's UTMA or UGMA, can I write it off at the end of the year?
Contribute to the what?
So it's a Unified Transfer to Minors Act. So it's like a custodial account. So UTMA, Unified Guardians. It's like a child's account. It's like a
Yeah. So you would need to create a child's account on that. So yeah, you would have to. That's part of the process. Is they need to get a separate child account. You would have to give them a W-2. It needs to go into their account. So yeah, that's part of the process.
Yeah, so you could definitely write that off. All right, cool. I think we good. All right, y'all. Make sure. Wait, hold on. You got time for one more?
I do one more.
So can you have two separate accounts to do your taxes? One for personal, one for business. I think you should, right? You should separate your personal and your business expenses for sure.
Yeah. So just to make sure, So a couple things on that, just because I don't want to assume. So I'm gonna talk about two topics real quick. So yeah, if you're a business owner, you want to have a personal account and a business account. All business related activities to go in that business account. Personal, leave it personal. If you start commingling funds, meaning moving money back and forth between the personal and business, you could actually lose. Like, let's say you have an LLC that protects your personal assets. You could actually lose that corporate veil, and someone can come after your business and sue you or whatever the case is. So yeah, make sure you go ahead and have two separate business accounts. As far as from a tax perspective, I'm not sure if this was part of your question too, but depending on your entity structure, we talk about this in the program too. If you have a pass-through entity, the business taxes go to the profit of the business goes to the personal side. So there's not much separation from that aspect. So I know sometimes I get people who are just like, I want to file my business and personal taxes separately, and most people have a pass-through entity, and it doesn't work like that. It's a separate tax form, but it pretty much ends up coming out to the personal return to 1040.
Yeah, that's a great point. So definitely separate them, like your expenses, your personal expenses and your business expenses, so you don't pierce that corporate veil. But when you file a taxes, if you got a pass-through entity, it's all going to go on a personal anyway under your, whatever schedule you have to do. All right, bet. Yo, Mitch, appreciate you. Make sure y'all follow my guy, Michel Valbrun, MichelValbrun, aka Money Making Mitch. Definitely go to taxwealthsecrets.com. use the code MindRight20 for 50% off. He goes through all of this. So all of this, he goes through this, but in plus, right? Plus, he's able to do a one-on-one, right? And so if you have specific questions that you wanna ask, make sure you hit him up, because he knows his stuff for sure.
Yes, sir.
All right,
Hey,
Mitch,
appreciate you. Appreciate
any
y'all,
closing
man.
words before I play your outro? You know what I mean? Any closing words for the people?
Yeah, man. Make sure you go ahead and tap in. Whether you work with me, whether you get the program, whatever the case is, do not go at this alone. These are big changes. These are sweeping changes. It's going to impact your finances. Taxes are the single largest expense in your life. Over 50% of your income is pretty much taxed. So make sure you get this knowledge, get the information, utilize it, and go ahead and tap in on that course, taxwealthsecrets.com. MindRight 50% off. Y'all be good.
Go. And then for her for real, I'm gonna do a separate live about the debit cards, because I want I want to get more information about the platform. So we're gonna do that separately. But round of applause. You're dealing the kill. Who deserves it? It's my accountant.
Irish should have had the town has to surround it. It's all the lawyers.
Appreciate you, Mitch. All right, y'all. I'm gonna save this live. Please, share this with everybody. Anybody you know that needs this information, please share this live with them. I'm gonna send this up there. Follow my guy, Michel Valbrun, aka Money Making Mitch. King, I appreciate you. Till next time.